So Bitcoin seeing some sell pressure today. What we do know, and what I went over obviously earlier on, is that we have a chart where we have very obvious technical support here, right? So you have this area here, this area, this area, this area, and now we're kissing it again.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway reveals institutional-level analysis and techniques to retail investors in this show. Gareth has been a day trader and swing trader for over 25 years and worked with countless hedge funds and mega institutions to train their traders.
So what this tells us, it gives us information on the chart. It says, watch this level. Every time price gets here, it bounces up. Okay, so we know that that's support. That's what support is, the definition of support. It's that causes price to bounce off of it. But what does it also tell you? It tells you that if price were to break below that level, now you have kind of that trapdoor opening and price can fall through dramatically, right? So again, this is a level that if you're a technical trader or even just a Bitcoin trader out there, crypto trader, you want to be following very, very closely. It's right around 91, 92,000, give or take, and you can see very clearly this would be the level that you might need to monitor. On the upside, we know the 108 level. That was a level that I gave you guys early on here, and I said literally a month ago, watch for Bitcoin to go up to 108. When it hits it, that should be your major resistance. We've had about a 15% pullback. Now, I said this earlier today in the game plan is that we can't claim victory yet that this is a longer-term high. And the reason why is because time will tell. So we have to be patient. We'll look back in a month, 2 months from now and say, yep, that was it. That was a long-term high. But I will say this, if you look at the bigger picture on the chart, and I'll go over and show you guys, it has all the earmarks of being a longer-term high pivot. And the reason I say that is because here very clearly, and let me go to the weekly so we can see it a little bit more clearly, but when you have all the like going back to 2017, these highs all matching up, was this a major high? Yes. Was this a major high? Yes. Was this a major high? Yes. And so as just a logical investor, you have to at least be open to that possibility that this is another major high because it has been in the past. We don't have any other data to go off of. Now, is there still a chance that it could maybe not be and maybe we race through? The answer is yes, but we don't know that yet. Make the chart prove itself first before you start saying this time is different. Everyone always says that. Like literally when we were going up to 108,000, I said, hey guys, 107 to 108,000, this is going to be a major level to see. And then everyone's like, well, not everyone, but a lot of people, this time's different. This time's different. That's what I've heard every single time. And it might be. Maybe this is the different time, but we don't know that yet. And the key is, as a trader, I don't have the luxury to say, this time is different. Let me position myself. What I have to do is go with probabilities, because as soon as you take away probabilities and you don't use them, you're at the mercy of the market, at the mercy of emotion. And that is where, at least for me, I've taken my biggest losses when I lose my head in terms of logic. Logic dictates when you go with probability, you're putting odds in your favor. You essentially become the casino and not the gambler. All right, last couple charts to go over here. We have gold. Gold is just down ticking a little bit here. We're right on this level. Notice we closed below here. We've now rallied back above, and now we're going to close today right on this line. Which way does it go? To be honest, I favor the upside ever so slightly, like literally 55 to 45%. It's almost 50-50. In other words, when I say that, what does that mean, guys? It means I don't have a good read on the chart.
Today in crypto, Hyperliquid has seen major net outflows amid concern over possible North Korean activity. The IRS rebuffed a lawsuit challenging staking taxes, and Botswana's central bank said crypto is low risk and pushed for timely regulations. Hyperliquid has suffered its largest ever outflows, over $256 million in the last 30 hours to December 24, after security experts said that North Korean hackers were trading on the crypto derivatives platform. MetaMask security researcher Tay Monahan said in a December 23X post that the Hermit Nation's hackers had been using the platform from as early as October in a bid to test how to exploit it. The post sparked concerns about the platform and outflows from Hyperliquid, on December 23 hit an all-time peak of $502.71 million, while inflows reached over $253.5 million. Hyperliquid said on Discord it was aware of reports circulating regarding activity by supposed DPRK addresses. There has been no DPRK exploit, or any exploit for that matter, of Hyperliquid. All user funds are accounted for. North Korean hackers, such as the Lazarus Group, have stolen $1.3 billion worth of crypto in 2024, doubling last year's haul in an effort to scrape together cash for the nation, mostly cut off from the world by sanctions. The U.S. Internal Revenue Service, IRS, has reaffirmed its stance that staking rewards are taxable income upon receipt, rejecting arguments from a second lawsuit filed by Joshua and Jessica Jarrett. The couple had contested that rewards from staking should be treated as property and taxed only when sold. In its response, the IRS referred to Revenue Ruling 2023-14, which mandates that staking rewards must be reported as income at their fair market value when they can be sold or exchanged. According to the tax agency, Revenue Ruling 2023-14 requires taxpayers who receive staking rewards to report the rewards as income at their fair market value upon having the ability to sell, exchange, or otherwise dispose of them. The Bank of Botswana said the country's local crypto markets remain undeveloped and categorized it as a low-risk investment. Still, the bank said that regulations should be put into place to prevent potential digital asset risks in the future. Domestically, risks emanating from crypto assets are minimal, but ongoing misconduct in the segment presents regulatory concerns. Regulators therefore need to develop effective oversight frameworks for the sector. In its financial stability report, the central bank said that the increasing interconnectedness of the crypto market with the rest of the financial system presents potential future systemic risks.
Looking at the market on an intraday basis, this is the S&P 500. Each candle on this chart is 10 minutes long. And what we can see is, my point of bringing this up, by the way, is just to show you how quiet it is, right? So the market opened right here. This is where we opened. We floated down. There was a little bit of selling at the open, just minor selling, maybe some leftover institutional selling. And then we just have been floating gently up. We had a small profit-taking period in the mid-afternoon, and then into the end of the day, right back up we go. So again, gentle upside, light volume upside as we're in to the holidays here. Now, let's go into a couple key chart movers today, because there are some. All right, so we are seeing, for instance, Tesla today getting a small bounce on the chart. I drew in the trend lines of generally what happens when you have these upsloping channels. They can stay, price can stay in them for long periods of time, but the more you hammer on the low end of the channel, the more you have the potential to break down. Now, in general, into year end, you would assume a float up. Also, you have a hit here, which gives you that float to the upside. But I would dare say in January, look for Tesla to start to break to the downside. And part of this, by the way, and I want to explain this, folks. So let's talk a little bit about the mechanics of the market. Any stock that's up big on the year, you're going to see less selling into year end, partially because of window dressing, where institutions that are sending client statements out, they're not going to sell their winners and then send out those statements without those winners on it. They want their clients to see that they've been in Apple for the year. They've been in Tesla this year. They've been in these other big names that have performed well. However, once you get into January, they don't have to send statements to their clients until the end of quarter statements. So they can start selling. If they think Tesla's overbought or if they think Apple's overbought, they probably won't sell before year end. But once you get into January, they might have wanted to exit. They just didn't want to exit prior to year end. In addition, if you're an investor and you have a big gain in Tesla for the year, you're not selling at the end of the year because you don't want to pay taxes on that money. So you're waiting to January, right? So look for a lot of these high flyers, a Palantir, a Tesla, an Apple, some of these other big movers. In January, they should have a lot of selling pressure bringing those prices down early in the month, early to mid-month. And again, look for that. That's a very common occurrence.
Retail investors are famously always late to the party, flocking to Bitcoin only when it smashes through glamorous milestones like $100,000. This Christmas, the dinner table will offer more than turkey and pudding. Expect curious relatives to test your crypto savvy and ask how to join the bull market. Are you ready for the spotlight? This festive season, your orange pill credentials are on trial. Will you dazzle with eloquent arguments on decentralization and monetary sovereignty, or crumble like a stale mince pie and just stammer, "Number go up," under the holiday spotlight? Fear not. Here are some tips to steer your family and friends through the crypto conversation. One of the first things you must do is make sure they know that any action taken is their responsibility. Inexperienced investors might mistake you for a crypto guru, but let's be honest, that's probably not the case. Chris Bernisk, partner at venture capital firm Placeholder and former blockchain products lead at RK Invest, put it, "No one knows anything for sure about markets. The only people you know for sure are lying are those who say they know for sure." When crypto markets roar in a full-blown bull run, everyone feels like the next Warren Buffett. Stay humble. Admit you don't have all the answers. Remind them not to follow your footsteps blindly like a herd of sheep. Caution is key, even in a frenzy. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.